Welcome to the Weekend View, the show that brings you up to date on the week that was. Here are the top stories. Pranab Mukherjee dilutes GAAR but targets Vodafone. RBI takes sweeping measures to rescue the rupee. And Hillary Clinton pressures India over Iran. First up, one of the most controversial tax proposals in recent times has finally been postponed. On Monday, Finance Minister Pranab Mukherjee told Parliament his government would delay the rollout of the General Anti-Avoidance Rules or GAAR. Mukherjee said the delay would help both taxpayers and authorities address issues arising out of the proposal. Crucially, he added that the burden of proving tax evasion would now lie with the tax authorities rather than investors. GAAR had been announced a part of the union budget for this year, but its provisions scared foreign institutional investors. Meanwhile, some companies that have invested directly in India have good reasons to be scared. On Tuesday, Pranab Mukherjee said the government could still tax overseas deals that make capital gains by selling Indian assets. On cue, tax authorities announced the next day that they would make fresh claim on Vodafone. That will include 7,900 crores in basic tax and also a penalty and interest of 4,300 crores. The government plans to send Vodafone a notice once the Finance Bill 2012 gets passed. And switching to other developments, the Reserve Bank is pulling all stops in its efforts to defend India's battered currency. On Thursday, it laid out new measures that could help shore up the rupee. Most significantly, it told exporters they would have to sell half of their foreign currency holdings. The move is expected to infuse at least $2.5 billion into the market. RBI also allowed banks to take intraday currency trading positions up to 5 times their overnight limit. Until Thursday's announcements, banks were not allowed to take intraday positions greater than their overnight limit. RBI is hoping the move will dampen rupee volatility, but the currency continues to get battered. The rupee ended Friday at 53.64 to the dollar. And while the rupee may be falling, it may not be enough to boost exports. Indeed, on Thursday, Commerce Secretary Rahul Kuller warned the export growth may slow down to 10 to 15% this fiscal from the previous year's 21% growth. He also released trade figures for April. According to them, India's export for month went up just 3.2% to $25.4 billion. Imports, meanwhile, fell 3.8% to $37.9 billion. That meant a trade deficit of $13.4 billion for the month. The one bit of silver lining from the gloomy trade figures is that, with imports also expected to fall, the country's trade deficit could narrow. And the disappointments for India's economy don't end there. The country's industrial output has also plunged. The index of industrial production for March actually contracted 3.5%. In February, it grew 4.1%. The latest decline in the volatile IIP index came largely because of capital goods. They dropped 21.3% in March. And moving to corporate news, India's biggest company has effectively downgraded the value of one of its most important businesses. On Monday, Reliance Industries slashed the value of its proven gas reserves. It cut its estimate by 6.63% of proven reserves at the beginning of the last fiscal. That amounts to a reduction of 0.43 trillion cubic feet. While RIL hasn't mentioned any particular fields that have been affected, its management has indicated that this is largely because of falling production at the once lucrative KG-D6 gas block. RIL's estimate comes even as it repeatedly clashed with the government over the cost of developing fields and the selling price of gas. And there was bad news for the IT sector during the week. On Monday, Cognizant Technology Solutions, one of the most successful companies in the industry, slashed its forecast. Cognizant cut its 2012 projection for revenue growth by a full 3 percentage points to 20%. That will mean a revenue of about $7.34 billion. Cognizant said the reduction in the forecast was largely due to a slower than expected growth in demand, especially from North America. And here are some stories in brief. The government has once again backed down on a reform measure. On Thursday, the cabinet deferred a decision on increasing the FDI limit in insurance joint ventures from 26 to 49%. The government plans to build a political consensus on the issue before pushing for changes. The government has ordered an inquiry into drug regulator CDSCO. That's after a parliamentary report claimed irregularities in the drug approval process. The government has appointed 3 experts to look at the scientific procedures for approving new drugs without trials. And finally, the US is increasing pressure on India over its relationship with Iran. On a visit to Delhi on Tuesday, American Secretary of State Hillary Clinton refused to discuss a waiver of potential sanctions. While Clinton agreed that India had reduced its oil imports from Iran, she said it needed to do more. Later, she also called on Pakistan to crack down on terrorists operating on its soil. And that's all we have for you. Thanks for watching.